Hey everyone, welcome to our Optimum FX weekly analysis. It's currently the 17th of October today, 2021. So it's Sunday where I am at the moment, and about 12 hours until market open. So we're going to be analyzing our major currency pairs, be looking at gold, and we're looking at the Dow Jones. So firstly, we're going to have a look at what macroeconomic data is going to release, and then mapping out trade ideas with the technical and fundamental confirms. Alright, so firstly, we'll go across the US. So US, we don't really have much data being released this week. So we do have Fed members speaking on Monday, and we do have industrial production and a monthly budget statement. Tuesday, we do have building permits and housing starts, along with the red block index, and subsequently to that, we do have some Fed members speaking. Okay. Next, we do have mortgage applications, which will tie in with building permits and housing starts, mainly for new dwellings or new homes. So, and then on Thursday, we do have, as usual, jobless claims numbers and fully fed manufacturing survey. And on Friday, to end the week, we do have preliminary PMI numbers. So moving on to the UK, on Wednesday we do have CPI, PPI numbers, so consumer price index, producer price index, and retail price index numbers being released. So really it's just a inflation gauge on the increase or decrease, most likely increase, of the price of goods and services, how much they've increased month over month, year over year. So next thing we do have is public sector net borrowing on Thursday, and GBPJPY consumer confidence. So consumer confidence ties in with CPI, and mainly the CPI numbers, because it's really just a gauge of the consumer confidence and essentially the consumer spending across the economy, which again will tie in with retail sales. So more than likely, if we do have positive CPI numbers, obviously that is great for the pound, and if consumer confidence is high, that's great for the pound also. And then if we do, and honestly, if consumer confidence is high, more than likely retail sales is going to increase over as well. Okay, because at the end of the day, you know, if the UK citizens are paying higher for goods and services, consumer confidence is going to be high, and then retail sales is going to be higher as well, because you know the consumers are very optimistic and less conservative with their spending habits. Okay, so next thing we do have is Europe. So Europe, we do have construction output numbers as well, along with CPI, consumer price index, which is inflation numbers as discussed before, and we do have consumer confidence, very similar to UK. And on Friday we do have preliminary PMI numbers. Moving on to Japan, we do have imports and exports numbers being released, and on Thursday we do have CPI numbers. Moving on to Canada, we do have Bank of Canada Bank of Canada member Lane speaking, and we do have CPI numbers being released on Wednesday, and we do have ADP employment change, but I don't really think, based on my previous experience, I don't think it's going to bring much volatility to Canadian equities and the Canadian dollar. Next thing we do have to end the week is retail sales, so essentially the consumer confidence of the Canadian economy. Next thing we have across China and Australia this week is industrial production to start the week, in GDP numbers in China. Okay, so you know this is going to bring a ton of volatility to our global equities, and especially with the Australian dollar as well. So yeah, this is going to bring a ton of volatility, because it's really going to tell us, you know, quarter over quarter, year over year. So mainly quarter over quarter for GDP, year over year for industrial production. So yeah, that is going to, you know, show a lot of volatility, because it's going to show us the output of the Chinese economy, and we do have to understand that, you know, the amount of companies and businesses across our major economies, across nearly every country in the world, you know, their ties, their trade relationships with the Chinese economy, and how much they rely on China to produce their goods and services. Okay, So that's going to bring a lot of volatility. Obviously, if it's if it's an increase, quarter over quarter, year over year, that's gonna add a bit more boost to our global equities. Okay. Next thing is we do have the RBA meeting minutes, and we do have the PBOC, People Bank of China, interest rate decision, along with the house price index on Tuesday, and we do have banks business confidence numbers being released. So that's a quarterly report, so that's something going to bring some volatility, especially to Australian equities and the Australian dollar. And we do have RBA Governor Lowe speaking a day after that, along with preliminary PMI numbers. Okay, so now we're on the chart, we're on the 4 hour, so let me clear it up a bit. So we've definitely seen the Australian dollar start to rally after dipping down from these lows here, and we did start to break and clear above the 73-cent mark. Okay, so once we actually did clear above these highs, it was like very safe to say there was a lot of buy side liquidity. Once we actually start to break and retest this liquidity area, especially once we retest it here, like that will show a lot more buy side liquidity and a lot more outflows from a US dollar. So because at the end of the day we're trading Aussie against the dollar. So next thing as well, I was expecting some good rejections, roughly at this liquidity level here, and now I'm really seeing how we react to 74,600. Okay, so what I'm liking, because honestly for now I'm still bullish on the Australian dollar, especially with the Delta variant starting to be phased out, and especially with continued outflows and on the lower time frame, bearish vector structure on the dollar. So what I'm seeing, if we can stay above this liquidity level at 74 cents flat, I'm really liking some continuation buys. Break this liquidity level, so this order block high, come up, retest this area here, and continue buys. However, if we fail to close above here on the higher time frame, so for instance 30-minute, 1 hour, 4 hour, daily, I'm really liking some high risk, high reward sells. Okay, so that is a potential, but in order for that to happen, I need to see a lot more inflows into the US dollar, and I guess some fear and catalyst headlines to bring the Australian dollar down, and to push to more of a risk off sentiment. So that's what I'm looking for the Australian dollar. But in the short term, we could break and retest here, grab liquidity at these previous lows, and then continue back up. Okay, like it just be a bit of a pullback from this lower time frame bullish structure. Okay, so that's what I'm seeing on the Australian dollar. Moving on to the euro dollar. Alright, so euro dollar's been a lot weaker compared to our other risk currencies. So with the euro dollar, we actually did start to bounce from these lows, and on the lower time frame, we're showing a bit of a bullish structure at the moment. Okay, so what I'm really liking is if we can do a bit of a liquidity grab, or honestly just a bit of a pullback to retest this previous order block high, continue back up, clear these highs, start to retest 116,200, and start to target these areas here, and then I'll be wanting to target this previous level at 116,800. Okay, so that's what I'm looking, because I don't really see much of a reason to start selling euro, because at the end of the day, we're seeing a lot of outflows out of the US dollar, and at this point in time, I don't really see any point, trying to pick a top on euro, or trying to pick a top on euro and trying to sell it. Like, I don't really have a fundamental reasoning behind that. Obviously, there's been a slowdown in industrial production and output in the European economy, but it's not really enough just to, see a lot more inflows into the dollar and a lot more outflows in the euro. So I don't really see at this point, I don't really have a fundamental bias to start selling euro. So what I'm really liking is if we can do, if we can retest this previous order block high and then continue back up, clear above these highs, retest it, start to break above, retest and target these previous intraday lows, and then we can essentially mirror this initial downside move. Okay, so like I was saying, I do want to get a bit of liquidity grab, a bit of a pullback, see a nice high time frame candle body support. I don't want to close below here because then to me be very indecisive at that point. But if we see a nice candle body support being formed roughly at 115.750, we can take some medium risk buys, take it to the next high time frame key level, the previous highs, and then continue back up. Okay, so moving on to GU. So GU's been going GU's been appreciating a lot lately, and fundamentally the only reason why this is happening is due to Brexit optimism. Okay, so the EU have made a proposal in regards to the Northern Ireland Protocol, which, just to quickly I don't want to go into depth about it, just to quickly summarize, honestly, the EU proposal is great for the UK economy because obviously it diminishes a lot of tax and a lot of flaws with the transparency of transporting goods and services. Okay, so at the end of the day, it's good for the pound, and at the end, and it's bad for the euro. Okay, so when there's Brexit optimism, that is very optimistic for the sterling. Okay, when there's Brexit tensions, euro will appreciate. When there's Brexit optimism, sterling will appreciate. Okay, so that's why we honestly, and then I'll go and tell you why, and I'll tell you why GJ has been appreciating a lot more compared to GU. Okay, so with sterling dollar at the moment, what I'd like to see is if we can potentially, I'm looking at these liquidity levels here, right? I'd probably like to get a solid retest, see how it's just a pullback. That's roughly, how much is that? That's probably like 80 pips, like an 80 pip pullback. Wouldn't be surprised if that happens, but I'm really liking if we can do like an 80 pip pullback, and then continue with the buys. Okay, however, once we break and retest above here, get some nice high time frame candle body closures above 137.500, I'm really liking if we can play back in this little previous range. Okay, we can play back in this little range. Okay, so that's what I'm really liking at the moment. I wouldn't even be surprised even if we do like a pullback, to these previous closures here, these closures here. Okay, so I wouldn't be really surprised if we do like even a pullback here, but I'll probably be to me that'd be a very high risk pullback if we do pull back a lot further. See a lot more inflows into the dollar to start the week before we actually continue with the actual move. So yeah, that's probably what I'm seeing with sterling dollar. Then come back, retest, stay above 137.500 and continue back up. Okay, and moving on with GJ. So GJ, very very similar structure. It's been a lot more accelerated. The only reason why, to me, this is why fundamentals matter. So the only reason why you've seen a lot of inflows to the pound against Japanese yen is because there's been a lot of negative headlines from the Bank of Japan members. Okay, because you got to realize the Bank of Japan is getting hit hard. They haven't really said that we're going to be hiking interest rates. The monetary, I guess, mood for the Bank of Japan is very very pessimistic. They're still talking about providing fiscal assistance. You go to Europe, you listen to the ECB, you listen to BOE, RBA, RBNZ, Federal Reserve, Bank of Canada. They're very optimistic. They're talking about cutting back on their bond buying program. They're talking about hiking interest rates sometime next year. They're talking about tapering as soon as this year. Bank of Japan are no, we still need fiscal assistance, and that's why Japan's been on the biggest downfall, and that's why That's why it's good to trade, a strong currency against like a very weak currency, because it just trends. But I'll be completely honest, I was not seeing GJ come up to like 157. I was not seeing that at all, like not at all. Like if I'm being completely honest, I would have not, forecasted a move like this to start the month. Okay, because realistically, to start the month, we started at these lows here, and now we just like completely rallied. So I was expecting, some bit of indecision here, bit of a pullback, and then probably at the end of the month start to continue this rally up if we see continued inflows with the sterling and outflows out of the Japanese yen. But it's been really accelerated, so I don't really want to go out and call tops or bottoms. But just from the current structure that we have at the moment, honestly, I doubt you're ever going to see a pull back to 153. It is very possible, but you probably need to see a lot of fear headlines. But honestly, I'm just waiting for a range to form. I won't be surprised if we just like have a high time frame order block in this area here. So that'll be like roughly like 100 pip like order block. And then honestly just take the high risk entry at the lows. But I just like honestly I don't know if it's gonna retest here, like only time will tell. But I'm just saying, like at this point in time, this is a more favorable demand zone for price to play around with until we have our next fundamental, I guess, move to push further to the upside. Whether hopefully, not hopefully, if it is optimistic headline, we can start to take these breakout trades. Okay, but if we start to close below here, yeah, we can take some counter trend sells, but honestly, I wouldn't be too inclined on that. Okay, so obviously, once you break and retest above here, we can take some buys, target some, recognize a lot more buy side liquidity. Okay, so that's what I'm looking at for GJ. USDCAD. USDCAD's been on a downfall. I was talking about last week, safer sells. Where was it? Yeah, I was talking about sells, roughly like 125, 500. I believe you can go check. Yeah, you can go check it out. My previous analysis. So, I mean, that did play out because we were just playing, with these intraday lows, and then once we actually did push further to the downside, we melted. And obviously, this is one of the main reasons that this has actually happened is due to, like I said, a lot of outflows out of Dixie and a lot of inflows with our Canadian dollar. Okay, especially with the appreciation in oil. Okay, because we got to understand that Canadian dollar, like the Australian dollar, is a commodity currency. Okay, so when oil appreciates, more likely the Canadian dollar will appreciate as well. So what I'm really liking, so I'm identifying, coming down to these lows here. I wouldn't be surprised if we do like a bit of a retest at 124, about 200. Play back in this little range, just accumulate a bit. And if we get some strong high time frame rejections here, we can take some high risk entries. And our safer entries is once we break and retest pretty much below 1.23600 and take the sales down to the next high time frame key level. So that's I don't really want to start buying USDCAD unless we snap back into this range. That'll be targeting these previous order block highs and then potentially snapping back in a high time frame order block. Okay, but like I was saying, I'm not really, I don't really have a reason to start buying USDCAD. Like I need like a fundamental reason as to why I need to start, changing my high time frame bias. Like until I get some more, I guess I see more bullish structure, being seen. Once you snap back above 125, I can probably start taking buys then, but I don't really like picking bottoms, picking tops, because it's impossible to be accurate. Like you can do it, it's just impossible to be accurate. Okay, so yeah, that's probably what I'm seeing with USDCAD at the moment. Next thing, I'll quickly go over gold. So gold, we actually did come up to 1800 roughly, and essentially this move was just due to the inflation numbers. So yeah, I know when inflation numbers did come out, we did spike up, grab liquidity, and then push further to the downside. But then we actually did start to push up, even though inflation was like everything was just status quo. But we did see some continued outflows out of the dollar, hence why gold started to rally back up. But we just engulfed that move on Friday. Okay, so yeah, we just engulfed that move on Friday. But when I'm looking at gold right now, so I want to break below 1750 for some sales. Okay, yeah, so I need, to me, that's probably one level that I'm looking at the moment, and we're pretty much trading back into the we're just trading back into the previous order block. Like this move, yeah, it's just being fully corrected. But if we start to break and retest, we can take some continued buys, target this level here, alright, and then eventually target the highs here at around 1800. Okay, however, if we fail to close above 17, roughly about where we are now, fail to close above 1770, we can take some sells. Okay, and then target 1750. Alright, so that's what I'm seeing with gold at the moment. So next thing is Dow Jones. Okay, so next thing with Dow Jones, we've just been seeing the strong pullback due to the Federal Reserve's sentiment of tapering, most likely in the next FOMC meeting. So that's why we've been seeing a strong pullback, but we've seen a lot of optimism into the Dow Jones. Like I said, outflows out of Dixie, and strong earnings. Because it's earnings seasons, earnings season at the moment. At the start of each quarter, it's earnings season. So, we've had a lot. We've had a lot of strong earnings, especially from the banking and financial sector, along with a few other industries as well. So, that's why we're seeing a lot more optimism, a lot more of a risk-on sentiment with the Dow Jones at the moment, and across our global equities. Okay, so probably what I'd be looking at, just with the tapering, with the tapering sentiment still in the air and most likely going to happen by November, I probably want to see how we react at 35,505. So it's only a couple hundred points away. So roughly getting close to those all-time highs, but really want to see how we react. These at this level here, potentially coming to 35,600. Okay. Yeah, so that's probably what I'm seeing with Dow Jones at the moment. Really liking how we cleared above these intraday highs here at around 35k flat. So yeah, so I'm still very optimistic. Yeah, I don't really have a reason to sell Dow Jones unless we get some headlines, some fear headlines, possibly some fear headlines, some weak earnings reports from our major companies. I don't really see a point in starting to sell it. I mean, you can go for high risk, high reward sells at the all-time highs, but it comes a lot of risk with that play, because you don't, honestly, there just comes a lot of risk, and I really wouldn't have a fundamental bias to start selling at 35k. Like I said, it's a high risk, high reward kind of